Every billionaire loves to call themselves self-made, yet nobody talks about how strange, lucky, or outright sketchy the road there actually was. Today, we're peeling back the curtain on how some of the most famous rich figures really made their money, starting from nothing and sometimes cutting corners along the way. But a fair warning, some of these get downright crazy, so buckle up. Andrew Tate's money story doesn't begin with yachts or motivational speeches filmed inside of rented supercars. It starts off a lot quieter than that. He grew up moving between countries, lived fairly modestly, and spent years grinding through professional kickboxing. And while being a world champion sounds impressive, the paychecks definitely didn't match the highlight reels. Kickboxing gave him discipline, confidence, and broken bones, but not wealth. The first real money came when Tate pivoted away from sports and into online businesses, specifically webcam studios. He's openly talked about running multiple operations, managing performers, handling marketing, and taking a cut of the earnings. Now, this wasn't some mysterious hustle, it was a deliberate, optimized system. Whether you see it as smart entrepreneurship or deeply uncomfortable depends on your moral compass, but frankly speaking, it worked. That business gave him actual cash to play with for the first time. Now then Tate discovered something far more powerful than fighting or even business, the internet's attention span. Social media doesn't reward subtlety, it rewards confidence, controversy, and saying things people feel compelled to react to. Tate leaned into that pretty hard. His online persona wasn't built to be reasonable or polite, it was built to be impossible to scroll past. And once millions of people were watching, that's when the funnel opened. That attention led directly into paid communities, online courses, and subscription platforms promising insider knowledge on money, mindset, and success. Reporting from outlets like Sky News observed bursts of course sales happening in very short time frames, which tells you a lot. The real money wasn't in secret financial wisdom, it was in marketing, scale, and convincing enough people that they were one mindset shift away from wealth. Now, there's no doubt that he is crazy rich. But his money didn't come from inventing anything new or building factories. It came from understanding algorithms, human psychology, and exactly how far you can push before attention turns into income. Love him or hate him, he's got this stuff figured out. Being talked about can be more profitable than being right. And somehow, this is still one of the less chaotic ways money gets made on this list. Jordan Belfort's rise to fame didn't start with connections, privilege, or a silver spoon. It started with him being broke, desperate, and willing to do just about anything to escape it. In his early 20s, he was selling meat door to door and barely scraping by. His first real taste of Wall Street came in the late 1980s, and almost immediately the firm he joined collapsed. Now, most people would have taken that as a sign, but he took it as a setback. What he realized early on was simple but dangerous. Stocks don't need to be good if you can sell them convincingly enough. Now that insight became the foundation of Stratton Oakmont, the infamous brokerage firm that Belfort co-founded. Now the business model was brutally effective. The stocks were junk, the commissions were not. At its peak, Stratton Oakmont was pulling in millions. Belfort himself was making tens of millions of dollars, funded almost entirely by investor losses. Authorities later estimated that investors lost around $220 million, while Belfort personally walked away with enormous sums before the collapse. But where did that money go, you may ask? Well, it funded his filthy rich lifestyle filled with yachts, helicopters, drugs, and parties that made the office look more like a frat house than a financial institution. This wasn't subtle fraud hiding in spreadsheets, and for a minute, it worked perfectly. Eventually, the law caught up. Belfort was arrested, pleaded guilty to securities fraud and money laundering, and was sentenced to prison. He was ordered to pay over $110 million in restitution, most of which remains unpaid. By any normal standard, this would be the end of the story. But somehow it wasn't. After prison, he reinvented himself again, this time monetizing the very chaos that ruined his first fortune. Books, speaking tours, and movie deals turned his downfall into another income stream. Jordan Belfort didn't just make money breaking the system, he made money explaining how he broke it. And compared to what comes next, this was just a warm-up for financial insanity. Sam Bankman-Fried's rise to wealth is one of the fastest, strangest, and probably the most unsettling money stories of the modern era. He didn't come up flexing or selling dreams. He came up looking like the guy who forgot to shower but somehow knew the answers to everything. He grew up in an academic household, studied physics at MIT, and initially worked at a quantitative trading firm. Now, on paper, he looked like a math genius. In reality, he was about to discover that sounding smart can sometimes be more profitable than being right. His first major move? Alameda Research, a crypto trading firm that made money by exploiting price differences between crypto markets. In the early days of crypto, prices varied wildly from one exchange to another, and Alameda capitalized on that inefficiency. But the real explosion came when he launched FTX, a cryptocurrency exchange that promised to be safer, smarter, and more professional than the rest of the crypto world. Investors bought his story, politicians trusted him, celebrities endorsed him, and within an insanely short period of time, he was being called a financial prodigy. Now, at his peak in early 2022, Forbes estimated his net worth at around $26 billion, most of it tied to FTX's valuation. Now, here's where everything fell apart. Prosecutors later alleged that behind the scenes, customer funds from FTX were quietly being funneled to Alameda Research to cover losses, make risky bets, and fund investments. Billions vanished. FTX filed for bankruptcy, and the same guy who was being hailed as crypto's savior was suddenly facing fraud charges tied to roughly $8 billion in missing customer funds. The empire didn't slowly crumble, it was literally reduced to ashes. What makes Sam's story so disturbing is how long the illusion held. There were no fancy yachts or loud parties. There was billions disappearing into a hoodie. Now, our next story is billions multiplying in plain sight. Rockets, tweets, and all. Elon Musk's money story is often told like a superhero origin, but the reality is messier, way louder, and a lot more stressful. This guy didn't grow up broke in the traditional sense, but he also didn't start rich in Silicon Valley terms. Musk immigrated to North America, worked odd jobs, lived cheaply, and funneled almost everything he had into early startups. Now, as far as money was concerned, he wasn't living the billionaire lifestyle. He was sleeping in offices and betting everything on ideas that could have easily failed. His first real payday came in the late 1990s with Zip2, a basic online city guide that was sold to Compaq for $307 million. Musk's cut was reported at around $22 million, which sounds huge until you realize he dumped the most of it back on the table. That money went into X.com, an online baking startup that later merged and became PayPal. When PayPal was sold to eBay, Musk walked away with roughly $180 million. Now, this is where the story usually pauses, with them retiring. But Musk did the opposite. Instead of playing it safe, he poured almost all that money into two extremely risky ventures, SpaceX and Tesla. Now, both companies nearly collapsed. Tesla was burning cash and facing production nightmares, while SpaceX failed multiple rocket launches in a row. Now, it got so bad at one point that Musk said he was close to being completely broke again. Now, this wasn't a billionaire drama, it was a genuine coin flip moment where failure was the most likely outcome. Now, what separates him from a lot of other people is timing and endurance. SpaceX finally succeeded, landing major government contracts, while Tesla survived long enough to benefit from electric vehicle demand and market hype. As Tesla's stock price exploded, Musk's wealth ballooned with it. The majority of his fortune didn't come from salary or dividends, but from equity value tied to investor belief. Now, of course, being rich means nothing if you're the center of no controversy. Market manipulation accusations, wild tweets, broken promises, and constant chaos are part of the package. Musk didn't get rich by being quiet or careful. Now, if his rise is about surviving failure, the next rise is about embracing danger and building one of the most profitable criminal empires in history while he was at it. Pablo Escobar's path to wealth didn't start with business school, venture capitalism, or a motivational quote taped to a mirror. It started with poverty, so criminal acts soon followed. But Escobar didn't stumble into crime by accident. By the late 1970s and 1980s, Escobar had effectively built an international logistics empire, just an illegal one. His cartel controlled enormous portions of the global cocaine trade, moving drugs by planes, boats, cars, and tunnels with efficiency the most legal companies would envy. At its peak, the cartel was reportedly making hundreds of millions of dollars per week, with some estimates suggesting around $420 million weekly. Escobar's personal net worth has been estimated anywhere between $25 and $30 billion, adjusted for inflation, making him one of the richest criminals in history. And yeah, obviously that money came with ridiculous problems. Escobar famously lost millions to rats and moisture because he had so much cash that storing it became a full-time issue. Just imagine being so rich that your biggest expense is literally replacing eating money. Now, unlike the other people on this list, Escobar didn't just spend his money quietly, the dude went all out. He built mansions, zoos, private armies, and even handed out cash to poor communities, earning a twisted Robin Hood reputation. Yeah, but that image came at a cost. Violence, corruption, assassinations, and fear followed him everywhere. His fortune wasn't just built on drugs, it was built on intimidation and bloodshed. Now, eventually, the same scale that made Escobar rich made him impossible to ignore. Governments closed in, allies turned and flipped, and his empire collapsed underneath its own weight. He was killed in 1993 and in one of the most profitable and destructive criminal operations ever created. Escobar's story is more of a warning than an inspiration. He proves that starting from nothing doesn't guarantee a heroic ending, and that making billions doesn't mean you win. Sometimes it just means you last longer than everybody else. Escobar built an empire by breaking every law imaginable. Now, our last one is all about someone who stayed mostly legal and somehow still made it feel just as fake. Dan Bilzerian's money story is fascinating because it sounds simple, it looks outrageous, and somehow it doesn't still fully add up. According to Dan himself, he made his fortune playing high-stakes poker, winning millions in private games against ultra-wealthy opponents. Now, don't get me wrong, it's a great story, but the crazy part is, it's never been independently verified, which is where things start getting a little interesting. See, he grew up around money, just not clean money. His dad, Paul, was a corporate raider who later became a convicted felon for securities fraud. Dan has said he received a trust fund that helped bankroll his early lifestyle, though the exact size and source of that money have been debated for years. What's clear is that Dan didn't start from nothing in the traditional sense, but he did start with something far more powerful than cash: access. Instead of quietly investing or building a business, he did something far more modern. He turned his life into content. Guns, private jets, mansions, yachts, parties, models, you name it, he did it. Everything was filmed, posted, and carefully curated. Instagram became his showroom, and the flex wasn't subtle, but way too extreme that people couldn't stop watching even if they didn't believe it. That attention eventually turned into money through sponsorships, appearances, and his lifestyle brand Ignite, which sold everything from CBD products to energy drinks. On paper, Ignite seemed like a legal company. In reality, financial filings later revealed that the company spent crazy amounts of money marketing Dan himself, including private jet travel, luxury housing, and personal expenses, while generating relatively modest revenue. The brand existed, but only to cater to his luxury lifestyle. Now, here's what makes him perfect for this list. His wealth wasn't built on innovation, crime, or even traditional scams. It was built on the illusion of wealth itself. And that's the final twist. After factories, fraud, rockets, drugs, and crypto collapses, the last story proves that sometimes the fastest way to make money isn't even to build anything at all, it's to convince the internet that you already have. So whose story had you on the edge of your seat? Let us know your pick and why down in the comments, and we'll catch you later.